Hey everyone, welcome back to Corporate Decoded, the place where we unpack the financial mysteries that shape the market. Today we are diving into an 8K filing from M2i Global Incorporated, a report that hints at some significant shifts in their preferred stock structure that could really impact how the company operates and how investors see it. Stick around because what we find out could be a game changer for this company. Alright, so what we have here is M2i Global Incorporated filing a document that essentially creates a new class of stock called Series B preferred stock. Think of it like adding a new flavor to their existing stock menu. They are authorizing up to 500 shares of this new Series B preferred stock. Now, preferred stock is a bit different from common stock, which is what most people usually buy. Preferred stock often comes with certain special rights and privileges that common stock doesn't have. This Series B preferred stock has a pretty hefty price tag at $10,000 per share. That is a significant amount of value attached to each share. But here is where it gets interesting. This preferred stock isn't just sitting there, it can be converted into the company's regular common stock. This conversion power is a really key feature, and it means that the holders of this Series B stock could potentially become owners of a lot more of the company later on. So if you hold one of these Series B shares, you have the choice to convert it into common stock, and the initial price for that conversion is set at 10 cents per share. Now this 10-cent conversion price is significant. When you compare it to the $10,000 stated value of the preferred stock, it shows there is a potential for a massive upside for the holder if the common stock price increases substantially. It also suggests that this preferred stock might have been issued at a discount or is designed for investors who believe in the company's growth potential. And there is another layer of flexibility here. The conversion price can adjust to be 95% of the lowest trading price of the common stock over a specific period. This is a really investor-friendly feature. It means that if the stock price dips, the conversion price also drops, making it even more attractive to convert. It is like having a fallback option that protects the investor's potential gains and makes sure they can always get a good deal when converting. Now, this is a pretty common but very important clause. It is called a beneficial ownership limitation. What it means is that no single investor can convert their preferred stock in a way that would make them own more than 4.99% of all the outstanding common stock without giving prior notice. They can increase this limit up to 9.99% if they tell the company in writing beforehand. This is a standard way for companies to prevent any one investor from gaining too much control too quickly, especially through convertible securities. It helps maintain a more dispersed ownership structure. There are also specific events that can force the conversion of this preferred stock. For example, if the company has a successful public offering where they raise a significant amount of money or complete another type of financing deal that meets certain requirements, then the Series B preferred stock might be automatically converted into common stock. This is often done to simplify the company's capital structure, especially after a major growth event like an IPO. This whole setup, the Series B preferred stock, is detailed in an exhibit which is basically an attachment to this report. It is officially called the Certificate of Designation of Preferences, Rights and Limitations of Series B preferred stock. This is the document that lays out all the nitty-gritty rules and conditions for this new stock. And the report itself is signed off on the 20th of February 2026. Just a couple of days after the designation was filed. It is signed by Alberto Rosende, who is the Chief Executive Officer. This signature confirms that the company is officially making these changes and acknowledging them. So what does this all mean for M2i Global Incorporated? Well, creating a new class of preferred stock with these conversion features suggests they are likely looking for capital or perhaps restructuring existing debt. The generous conversion terms at 10 cents per share and the potential for lowering that price based on market performance indicate a strong belief in future growth. The beneficial ownership limitation is a standard corporate governance tool to prevent hostile takeovers or overly concentrated power. The mandatory conversion clauses are designed to clean up the cap table upon certain liquidity events like an IPO or significant funding rounds. This move basically sets the stage for potential future financing or even an exit strategy for some investors. We are not seeing any direct financial performance metrics in this particular filing, which is focused solely on this corporate action. But it is a move that signals intent. The company is actively managing its ownership structure and preparing for what it believes are future growth opportunities. This Series B preferred stock could unlock capital or provide an exit route for early investors, paving the way for new strategic partnerships or further expansion. It is a piece of the puzzle that shows management is thinking strategically about the company's long-term trajectory. Alright, that is our breakdown of M2i Global Incorporated's latest filing. What is your take on these preferred stock changes and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching, see you next time.